Welcome. This is your Option Monster Volatility Sonar report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, we were unable to do the sonar yesterday because of technical issues, but today we're back up and the market is stabilizing today. After two significant down days where we saw major appreciation out of the VIX cash index and the front and second month futures, today we're sitting unchanged on the S&P 500, which generally, when you're unchanged after a couple of big run-ups in a volatility index, you're going to start leaking back down in that index because we're not realizing any volatility today. With even on the S&P 500, we've seen the VIX cash falling between 50 cents and $1 so far today, and the front month future likewise down about 40-50 cents. There's still a lot of trading, and it tends to be concentrated in the front month when you're in a fast-moving volatility environment. So most of the trades today, yesterday, and the day before were in March. And the last 2 days, we had significant buying activity. There were three different ways people were buying. People were buying electronically on the screen, trying to go after deltas or making a directional play. People were buying in open outcry on calls tied up to futures, going after a general volatility play. And they were buying the upside units like the March 40s, which traded 10,000 times for 20 cents in a crash protection play. So we've had all three of those kinds of trades, and then today we've seen volatility kind of reach a peak and is coming back down a little bit. And the way it's coming back down is generally through volatility. On the March 21 straddle, which has been a big trade, traded 5,000 times, we've had a seller of that for $4.20. So the seller of that is hoping for a settlement in between 1680 and 1520. So that's a pretty wide range, and where they really could get hurt selling that is if we see a scenario where the VIX moves to 2530, 3540. They have unlimited downside towards the upside. If the VIX moves downward, it's unlikely that they're going to get hurt severely. They'd need to go to 1580 for them to lose $1 on the trade. So the risk in selling that is really towards the upside, but that's the type of the order that puts a cap on front month volatility. People come in, sell that, option market makers are able to buy that, and then they in turn are more willing to sell at lower prices on other orders. So it's been an interesting 3 days. Jamie Tyrrell with Group 1 Option Monster.